Let me introduce you to the payroll cycle. The payroll cycle involves the employment and payment of all employees. Payroll is also an area in which company resources can be wasted because of inefficiency or stolen through fraud. As with the sales and collection and acquisition and payment cycles, the audit of the payroll and personnel cycle includes obtaining an understanding of internal control, assessing control risks, tests of controls and substantive tests of transactions, analytical procedure, and tests of details of balance. Differences between payroll cycle and other cycle. There is only one class of transaction for payroll. Secondly, transactions are generally far more significant than related balance sheet account. And lastly, internal controls over payroll are effective for almost all companies, even small ones.
Hi, my name is Atira. The second thing we should understand about payroll is its objective. In fact, there are 4 objectives for payroll. The first is to check each employee's pay distribution for the rate of compensation. The second step is to double-check the time card system and the paycheck. In addition, objective of a payroll audit is to establish ongoing compliance with foreign record keeping, and the last one is to confirm that all cancer checks are accurate and match with what was issued. Next objective of payroll is to confirm that all cancer checks are accurate and match with what was issued. The goal of payroll audit is to ensure that the employees are still employed. Last but not least, there's the payroll and personnel cycle's objective is to see if the accounts that are affected by it are fairly reported in accordance with generally accepted accounting principles.
Rare cycle. Rare cycle is only one class of transaction for payroll, more significant than related balance sheets. Effective for most companies, the importance of rare cycle is one of the major expenses. Improper classification and allocation of it may have material misstatement of net income. The finest aspect about this cycle is that payroll simply takes one transaction in which employee service is recorded and payment for that service is made to payroll in a short period of time. As a result, it differs significantly from other cycles, which typically require 2 transaction classes. For example, in the sale and collection cycle, cash and sale receipts are included as well as sales return, and uncollectible amount in revenue receivable. As seen in the slide on the second point in the cycle, accruing a payroll and withheld tax are frequently minor in contrast to the total number of transactions for their income. The Inland Revenue Board's IRB has declared the regulation to encourage effective control for withholding and paying payroll tax, as well as the employees' attitude problem if they are not received or paid. Do we need to audit over this cycle? It is because all key expenses in enterprise throughout the world are associated with the apparel segment, where there is a higher risk or erroneous classification and allocation, which could result in a material misstatement in calculating the company's net income. So, for example, an incorrect categorization that frequently occurs the misclassification of travel and cost as general expenses, despite the fact that it only has one account and require verification as to whether it should be transferred under general expenses or travel expenses.
The overall objective in the audit of the payroll and personnel cycle is, of course, to evaluate whether the account balances affected by the cycle are fairly stated in accordance with applicable accounting standards. Typical accounts in the payroll and personnel cycle are shown in this diagram. The accounts are used to illustrate the way in which accounting information flows through the various accounts in the payroll and personnel cycle. In the most systems, the accrued wages and salaries account is used only at the end of an accounting period. Throughout the period, expenses are charged when the employees are actually paid rather than when the labor costs are incurred. Accruals for labor are recorded by adjusting entries at the end of the period for any earned but unpaid labor costs.
There will be 4 business functions and account in the cycles, each of which will provide a unique description of how they use the document and how they record it. Based on associated actions, the first activity is human resources and employment. There are 3 types of transactions in this activity. The first of which is how they record internal employee verification, date of employment, pay, rates improve deduction, performance review, and employee termination. The second form is the deduction permission form, which is used to address payroll deduction for future employee benefits, such as income tax, retirement saving plans of EPF, and health insurance. The rate permission form is the last to be complete. It is used to verify the payment rate and come from labor contract information, or in the event of officers. Board of Director authorization form. The officers' Board of Director authorization.
Timekeeping and payroll preparation are the second and third company functions. They contain 5 connected documents, each with a particular type of usage and recording information. The first is a time record, which is a document that keeps track of when employees started and stopped working each day. The time reader will prepare this automatically at the office and submit it weekly. If a group of time or to request leave, the second task is time ticketing, which is needed of employees who work at a specified hour or in a department other than their boss. This is also automatically recorded by the computerized reporting system. The third file is the payroll transaction file. A computer generates the file, which contains all payroll transactions performed by the accounting system over the course of a day, week, or month. The employee's name, identification number, debt, and various withholding amounts are all contained in the system's file. Number 4 is a comprehensive record type that varies depending on the firm payroll journal or listing. This report is generated from the payroll transaction file, and the information submitted is identical to that in the payroll transaction file. It will be simultaneously uploaded to the general ledger and payroll master file. The payroll master file is a computer file used to record and preserve payroll transactions such as wages paid to employees, check numbers, debts, and net pay.
The following business operation is payroll payment, which has only 2 types of document and records. The first document is a payroll deposit check or direct deposit. This is a transaction that occurs when a department is responsible for paying an employee's salary in exchange for their services, despite the fact that some small business prefer to utilize cash. The largest corporation choose to use checks deposit, which credits each employee's bank account over time. This is the proper method of payments because it necessitates higher personal authorizations and evidence. The second step is to reconcile the payroll bank accounts, which is critical for detecting errors in all cash accounts, including payrolls. There's an impress payroll account, which is a separate payroll account with a low balance to be precise. The figure of each net payroll is transferred from the general account to the impress account by check or electronic devices. Only transferred immediately prior to payroll distribution. It also makes payroll bank accounting easier by limiting the client's exposure to payroll fraud and separating scheduled payroll expenses from idle expenses.
This is the last slide of the business suspension, which is referred to as payroll tax return preparation and payment of taxes. For the current calendar year, EF form contain gross paid income, tax service help or monthly tax reduction (MTD), deduction on employee provident fund (EPF), zakat, and SOCSO withheld. This form will be sent to the Inland Revenue Board (RAB) as well, and it will be computed using the payroll master file. the IRB will get the payroll tax return form, which will reflect the withheld taxes and employer taxes. This is the identical form that the payroll master file and computer generated. Remember that MTD, EPF data and social payments are due on a monthly basis.
Hi everyone. Okay, let's continue with the relevant account related to management accession. So there is four related account for them that related with management accession. The first one is the payroll cash. So like for example, the cash in bank that the payroll department used to pay the salary of the employees. Okay, let's go for the second one, which is all payroll expenses account. For example, like the salary, wages, bonus, commission, and tax expenses. And the third one, the third account is all payroll withholding account, such as we had income tax and the other deductions. Okay, let's go for the last one, which is all payroll accounts. All payroll accrual accounts. In this account, we got like accrued wages, accrued salary, accrued commission, accrued tax expenses, and the last one, and many more.
I'm Sarah, and I'm going to explain the internal control for internal auditors in the payroll cycle. Internal controls are the mechanisms, rules, and procedures implemented by a company to ensure the integrity of financial and accounting information, promote accountability, and prevent the fraud. Internal control for payroll is normally highly structured and well controlled, since processing payroll is similar for most organizations. It is not usually difficult for companies to establish good control in the payroll and personal cycle. So the purpose of internal control under the payroll cycle is firstly to manage the cash disbursed by the company in the payroll cycle, such as payroll paid to the employees. The second is to minimize the employee complaint and dissatisfaction, where the wage rate, salary, or commission rate is properly authorized. The third one is to minimize the payroll fraud, such as only employees existing in the computer data files are accepted when they are entered. And lastly is the payroll master files total will be compared with the general ledger's total in order to make sure that both of them match with each other.
Next, we move on to the possible misstatement that could happen in payroll cycle. Firstly, the misstatement of payroll expenses account. Second is misstatement of direct labor and inventory. Third is misstatement of accrued payroll taxes and payroll tax expense. Fourth is the misstatement of payroll tax expense and payroll tax liability. Lastly is the misstatement of commission expense and commission liability.
The first point is occurrence. The term occurrence refers to payroll transactions that are generally executed by non-fictitious employees. In occurrence, the objective that related is recorded payroll payments for work actually performed by existing employees. This is important because it means whenever we are paid for existing companies and for the actual work. The most important internal controls for these claims are the time records must first be approved by the supervisor. And then how do we test for this as an internal controls? We look at the time card to determine if it's approved. A time clock is used to keep track of time. We shall study and discuss the time record as a control test. In control tests, an adequate human resources file is kept. If HR has the original application that the employees files, they will check the human resources policies, check their credit report or the background of the personnel to see whether they have ever committed a crime. Next, employment is permitted. The HR department will evaluate the human resource file in terms of control. There are also divisions of responsibilities in human resource, timekeeping and payroll disbursement. During control testing, auditors will examine the organization's chart, speak with personnel, and see how duties are carried out. In addition, when employees are entered, only those who already exist in the computer data files are approved. The auditors will analyze printouts of transactions rejected by the computer as having non-existent personnel during the control test. Finally, prior to issuance, the disbursements are authorized. Auditor will review payroll records for evidence of the approval during control testing. For transaction substantive tests, the auditor will work for high or unusual amount in the payroll journal, general ledger, and payroll earning records. Compare cancel check or deposit information with human resources records, and compare cancel checks for valid endorsement.
So for the next management assertion is completeness. Audit objective that related to the management assertion is existing payroll transactions are recorded. For the key internal controls, payroll checks are pre-numbered and accounted for. Second, bank accounts are independently reconciled. So for the common test of controls, account for a sequence of payroll checks, discuss with employees, and observe reconciliation. So for common substantive test, reconcile the disbursement in the payroll journal with the disbursement on the payroll bank statement and prove the bank reconciliation.
As for the audit objectives, the recorded payroll transactions are for the amount of time actually worked and are at the proper pay rates, and the withholdings are correctly calculated. These are the key internal controls for accuracy objectives, which are calculations and amounts are internally verified, batch totals are compared with the computer summary reports, wage rate, salary or commission rate is properly authorized, and withholdings including amounts for insurance and payroll savings are properly authorized. The common test of controls for accuracy is examine indication of internal verification, examine file of cash totals for initials of data control clerk, examine the payroll records for indication of authorization, and examine the authorization in human resource file. These are the common substantive tests of transaction in order to achieve the accuracy objective. First of all, auditors recompute the hours worked from time records. They also compare the pay rates with union contract, approval by the board of directors or other sources. They will recompute the gross pay and the net pay. Then they will check the withholdings by referring to the tax tables and authorization forms in the human resource file. Lastly, they will also compare the cancel check or direct deposit with the payroll journal for the amount.
For the next management assertion is classification. The objective is payroll transactions are correctly classified. For key internal control, the first point is an adequate chart of account is used. Second one is account classification are internally verified. Common test of control, the first point is review chart of account. The next one is examine indication of internal verification. Common substantive test of transaction, the first point is compare classification with chart of accounts. The next point is review time record for employee department and job ticket for job assignment and trace through to labor distribution. Then management assertion is posting and summarization. The objective is payroll transactions are correctly included in the payroll master file and correctly summarized. The key internal controls are payroll master file content are internally verified. The next one is payroll master file totals are compared with general ledger totals. Common test of control, the first point is examine indication of internal verification. The next one is examine initiate summary total reports indicating that comparison have been made. Common substantive test of transaction, test clerical accuracy by footing the payroll journal and tracing posting to the general ledger and the payroll master file.
The last management assertion is timing. Its audit objective is payroll transactions are recorded on the correct dates. The key internal control of timings are procedure requires recording transactions as soon as possible after the payroll is paid, and dates are internally verified. Next is the common test of of control for timing. Firstly, examine procedures manual and observe when recording takes place. Second is examine indication of internet verification. Lastly, common substantive test of transaction for timing. Compare the date of recorded payment in the payroll journal with date on cancelled check or direct deposit and time record. And compare date on the check with date cleared the bank.
In this video, I would like to explain about the past year question for payroll cycle. The past year question that my group chose is January 2018 question 3 as our case study. By referring to this question, we can find few major possible weakness of internal control system, the possible effects and recommendation for each effect. From my observation, the first weakness of this organization is there is no segregation of duties between the recording and preparation of the payment instruction to the bank. This can cause payments made to the fictitious employees. For the recommendation, there should be a separation of duty between the person in charge of recording and preparing the payment instruction. The second weakness is the punch card are not pre-numbered with serial number. The possible effect occur is possibilities of missing punch card cannot be traced. This can be solved by introduce the pre-number punch card to the employees. The third weakness is there is no internal verification on the work performance by the payroll clerk. This can affect the payroll transaction may be incorrect. We can solve it by making sure that the accountant verifies the work performed by the payroll clerk. Next, no checking of the debit advice against the total amount in the payment instruction and the payroll summary report is performed when the debit advice is received can be one of the weakness. This can cause errors on the debit advice which might result in company losses. So the accountant needs to assign an accountant clerk to check the payment instruction against the payroll summary report in order to avoid any error. Furthermore, the next weakness is a staff in human resources department did not key in the actual hours worked by the employees into the payroll system. This can cause error or fraud to happen in the company. Recommendation that can solve the problems is the company can assign specific staff to be in charge in keying the recording transaction. The last weakness is only the net salary amount figure is showing on the net salary slips. This can cause miscalculation or wrong deduction of salaries. The accountant should provide detailed calculation of salary so that employee will get the right amount of their salary.